Hello, everybody. I'm Michael Smith. Welcome to the Lowdown. Today, joining me is DiLella. Dan is with Hotaling. So, Dan, maybe explain, what does that mean? How do you help a firm like Avidian?
Yeah, thanks for having me on, man. And so Hotaling Insurance Services, we're a risk management family office. And if for the listeners out there that don't know what that means, it's totally fine. We made it up. So essentially for us, we don't manage any money, which is why you still let me in the building. And what we purely focus on is working with high net worth families, generally that have operating companies, either pre or post liquidity, with all their risk management needs to provide one singular source that they can go to. So we have four key verticals: high-end life insurance, analysis, estate planning, employee benefits, so health insurance for companies that have multiple employees out there, commercial insurance, so like your general liability, property insurance, et cetera, and then private client, home, auto, umbrella, boat, plane, yacht, ranch. So basically creating a end-to-end singular solution that, you know, high net worth families can come to for all their risk management needs under one firm with different subject matter experts.
Well, that's well said, and definitely that's one of the segments we help on our wheel that we help with our clients is risk management, and so this is a big key for our clients. But let's talk about the insurance market for a minute. I mean, I got in the industry probably in '97. And I can tell you the insurance market, for what I've seen, has gone through many phases. But your firm, I think, does an excellent job in education. I mean, so many people ask questions. They think their understanding of insurance is one thing, but when they start explaining it, they don't really understand sometimes what they have. Your firm has done a great job, I've seen, of kind of breaking this thing down, keeping it simple. But we've been through a lot. I mean, we just went through the pandemic, post-pandemic. Here we are through the first probably of many inflation cycles to come. How do you see that's changed the insurance industry, and maybe what should consumers be looking at in that regard?
Yeah, so I think what you touched on, in the beginning is the insurance industry as a whole. So in the insurance industry, they're very opaque to begin with. Like let's say life insurance, it's a 75-page illustration that looks like Swahili. It's very hard to figure out, and a lot of times folks think they have whole life, or I think I have this, or I think the performance is that, and they truly don't know what they have. So we kind of focus on educational first, keep things simple, and really kind of making things less insurance-y and more what they're used to. So like the wealth management world, you guys structure things on a conservative portfolio, moderate, aggressive, based on what their goals are. We kind of look at it in the same way of like structure an insurance portfolio, whether it's conservative, maybe that has the word guaranteed a little bit more, it's not correlated with the market perhaps. Moderate might have a little bit less guarantees, but still some, maybe a little bit more upside. And aggressive is going to be something that has very little guarantees and is more risk-based, but whatever your premium is kind of equates to what an IRR can be. More conservative, lower IRR, more aggressive, higher IRR. So when you kind of structure vehicles like that, you can really kind of align with what a client's goals and objectives are on that side. So what we kind of encourage, and if you've seen it as we've had a lot of success with the families at Avidian, is reviewing plans in place.
Sure.
Life changes every 3 to 5 years.
Yeah.
Where you were probably 3 years ago is very different than where you were today. And where you're going to be in 3 years from now is very different. So the planning that you might have done in the insurance realm 10 years ago might have been really good at the time, given the facts and circumstances. But when you look at it now, it doesn't really hold a candle to what you need moving forward. And so many folks just, pay a premium, don't think about it, out of sight, out of mind. And that's not really how financial planning works. And a lot of the insurance instruments out there are just really pretty illustrations that don't necessarily live in reality. And, a lot of times people sign up for this, and this is how they explained it to me. And, well, now I can't contact that person at Northwestern Mutual because they're gone. And then we see an illustration, and it was assuming, a 9 to 10% rate of return in the market every year, compounding for 45 years. And we've only averaged 4%, and now we're drastically underperforming. But the insurance carriers make a very fair amount of money on life insurance policies lapsing. So they're not exactly calling the client to be like, hey, you're about to let us off the hook for a multi-million-dollar benefit that we're going to have to pay your family after you already gave us hundreds of thousands in premium. Like,
they're okay with that.
Yeah, they're okay with letting
Law
that
of
go.
large numbers works really well
like,
there.
It's like in reality, right? Like, I don't call people back if I owe them money and they're not coming to me. Like, I'm not going to be like, hey, by the way, like, I know I bet on the Bulls to win, but so I think that, a lot of people don't really kind of put that association together, because the carriers don't offer that same kind of service that might happen on different financial instruments out there.
Well, so would you say that right now, I mean, again, we've gone through a lot of changes. I think post-pandemic, I've seen changes in my retirees, people that are retired, where they had once maybe, I'm going to leave a lot to the children, a lot to the grandkids, I'm going to build this legacy. But the pandemic, we've seen life change, right? We've seen a lot of our friends have probably passed away. Things have happened, and the mentality shift that I've seen is like, well, you know what? I'm going to leave something for the kids and grandkids, but I'm now going to take a little bit of that chunk. I'm going to go travel. I've seen people live in life a little bit different than they probably would have. So with those things being said and life changes happening, what would be your suggestion as far as kind of reviewing your existing life insurance policy? How would you go about that process?
Yeah, so I think a lot of the baby boomers basically figured out what YOLO means. And they're looking at it saying, I worked 40 years. Now I'm 65, 68. I was just, my lifestyle restriction, or my lifestyle was restricted for a period of time, and I want to be able to go enjoy it. And instead of leaving $10 million to the kids, maybe they're okay getting 5 now. And it's more about me and my wife or my spouse having more time with each other. So I think the priorities and goals have really changed. And I think you've kind of had a dichotomy. I think, with the potential reduction of the overall exemption amount coming in 2025, 2026, I think you've seen a lot of people in the growth phase that are in their 40s, 50s that are still building, looking and saying, I need to do some estate planning, because if this drops off, I've got a real issue. So I think you've seen the people that are in growth mode, kind of your Gen X, your millennials, or your elder millennials, looking at that a little bit more of like, there could be some real changes, because we've got $33 trillion in debt, whatever the heck that means anymore.
It's 33 climbing, yes.
Yeah, and 18% going by
a year,
the day.
by the way.
Yeah, by the day. So do I think taxes are going to be higher or lower when I get older? Probably higher. And so I think that's on the forefront. Then on the other side, I think you've got the baby boomers that are a little bit older, that are maybe post liquidity, going, I want to enjoy my life a little bit more. And yeah, it sounded really good leaving my kids $10-15 million and having this big premium, but now that I've seen them, they're 35 or 40 and they're building their company and they're doing okay, and like, they don't necessarily need all that. And I want to retire, and I don't necessarily find the need to give them all that money. We've done our planning. We're good. So the purpose of that is really making sure that your plans align with your goals, and understanding that like your values in life change, and that's perfectly fine. Like that's how it's supposed to work. And when you're looking at that, it's like, okay, well, maybe do we want to decrease the premium? Do we want to decrease the benefit? Do we want to enhance the guarantees, because you had a plan that was really designed for accumulation and growing, but now you want to just stabilize it and kind of like freeze it in a sense, and knowing that, hey, like, I don't want to have to deal with this life insurance policy when I'm 83 years old, trying to call the 1-800 number, trying to figure out why my performance isn't matching this.
Well, and this is why, when we do financial plans for our clients, is we know all the different tools that are in place. So if a client asks, well, remind me why I have this insurance policy, our answer is, your insurance policy is to fund this. This is a specific purpose, or if it's multiple purpose, we say it's either going to do this or that.
Right.
But a lot of times people buy a policy, like you said, they may have had an intention, but as things change, they don't understand what's that policy doing for me now, and which is why it's probably a really good time, considering all the things we've seen, for people to reevaluate their policy and make sure it's doing the functions that they want it to do.
And do
or is it the best one in place, right? Is there something that might be new, considering all the changes? Is there something out there that's better? We've seen insurance carriers, ratings have changed.
Yeah.
Basically, their backing, the financial strengths have changed. So all those things need to be considered, correct?
Yeah, and I really think, like, when you're looking at it, how something has performed over years, when you guys do financial planning, I'm sure there's some kind of benchmarking metric.
Sure.
In the life insurance world, that never happens. No one ever says, like, here's what you signed up for day one, and here's where you are today, and kind of benchmark it. That's something that we very much focus on when we do a review, and we say, like, here's what they call the as sold. Here's what you got day one. Mm-hmm. Let's see where you are today compared to that. and then, focus on, okay, does that make you want to prioritize things like guarantees versus projections or performance? How much risk do you want to take at this stage of your game? Because life insurance had a specific design, right? Like, it's designed for passing on assets. And if you want to push that IRR a little bit higher, that's great, but some people don't, and they don't necessarily even know that they're in a vehicle that is doing that. They think they're all good because it's called insurance, but really it's a higher risk type thing, and they end up getting to 65, 70, and they wonder why they're getting letters in the mail. And that's something that we've had a lot of success on doing those plan analysis of saying, like, hey, for the same premium, you could increase your coverage by 30% and make it guaranteed. If you want to keep the coverage the same amount, you could decrease your premium by 22%, et cetera. So we've had a lot of success stories here, between our firms of just doing things like that.
So bottom line, good time to review. Make sure your insurance policy is doing what it should be doing. As I find many times, I sit down with maybe somebody that's brand new to the firm and they have an insurance policy. I ask them, what is this doing for you? And then what their answer is versus what's happening here is completely different. So totally. I see it all the time. Well, let me shift gears because I know you mentioned property casualty, and again, that protection, that's the foundation of whether it's your home, your business, or whatever that may be. But tell me a little bit about as far as what's maybe changed in that market or what people should be considering there.
Yeah, so one of the main focuses and pain points that a lot of people are seeing, and Wall Street Journal's written a lot of articles about this, is there's been a lot of property insurance inflation this year. Okay. And that's really been for a lot of the insurance carriers out there have just gotten whacked because of natural disasters, catastrophes, things of that nature. So what ends up happening is, like, you have traditional insurance like Travelers, right? And Chubb and people like that. But then the insurance carriers go to somebody that they call reinsurer. So there's like thousands of traditional insurance carriers, but then there's only like dozens of global reinsurers.
Sure.
So when there's an earthquake in Haiti, that doesn't necessarily affect a U.S. carrier, but it might affect the carrier's reinsurer. And that's happening everywhere. So what's happening is the reinsurers have pushed down on the traditional market and saying, we're going to increase your insurance costs to reinsure with us. And the insurance carriers, because they're for profit, they go to the clients and say, we're going to push this right back down on you.
Yeah.
And so now you have underwriters that are basically being told, try and get this risk off the books, especially in Florida, California, and Texas. Find any reason in the world to not renew them or jack up their rates.
Sure.
And then the clients, like, let's say you own a home, it's a $2 million home, you might be in Florida, you might be in Texas, California, the paying children right now. And all of a sudden you're getting this huge renewal increase. It's happening 2 days before your renewal. You have almost no time to shop it, and you have to try and figure something out, or you're getting canceled. And there's not a lot of really good options. So what we're seeing is anywhere between 25 to 150% increases on the renewal across the board, especially in those states that I mentioned before.
That's some high inflation.
It's a real number.
That's a game changer for a small business too, as well.
Well, exactly. And what we're finding a lot is on the property side. And so if you're not looking to shop at least 90 to 60 days ahead of time, it's going to be very challenging, because what's happening is everyone in the country is getting these high increases. So then everyone is shopping.
Of course.
So now an underwriter now has 5 times the amount of submissions on their desk, and they're just trying to get through it all. And meanwhile, their boss is telling them, try and find as many reasons to turn down business as possible. So you've just got this confluence of just bad things happening for the client. So what we're encouraging on is, like, start the renewal process early.
Get ahead of it.
Work with a broker that you can trust, that's going to be educational. If you haven't gotten your renewal, like, it's a tactic by the industry to wait to the last minute.
And you have a short window. So.
And you got to pay it. The bank requires you to have insurance on your home. Like there's simple things. So, like, it really is a tactic of waiting on a renewal, or they're just not necessarily starting as early as they can. Now, it is, like, on their side, like, it is a very hard market. So it is taking longer to market insurance out there. So that's certainly true, but it's also behooving on the broker then to start that process earlier if they know that it's going to be that hard of a challenge.
So bottom line is get ahead of it. If you normally waited maybe 2 months to kind of do it from your renewal date, you might want to bump that maybe a couple more months ahead of time.
Honestly, a lot of times clients don't even know when their plan renews, and they just get the renewal in the mail.
Well, that's probably majority. So
I
don't
would
wait
say
for that
be
to show up.
proactive. I would say be proactive of like when your renewal is, to try and get ahead of that, and ask to say like, who did you market this to? Who did we shop it with? Like, let's see my options.
Well, great, Dan. That's great advice. I appreciate you coming in today, and I think those are all good things for people to consider. And we'll be having you on, sometime soon. So
appreciate it, man.
All right, perfect. Thanks, Dan.
Thanks, buddy. Have a good one.